States are facing pressure to agree to rationalize GST rates as the central government has told a parliamentary panel that it might not be able to pay GST compensation to states in the near future, as the economy and revenues have been hit due to the COVID-19 pandemic. This comes just after the centre on Monday released 13,806 crore rupees to the states for March 2020. Wrapping up the full payout for FY20 at 1.65 lakh crore rupees. The total cess collection in FY20, however, was 95,444 crore rupees. Now, the compensation payments for this financial year since April remain pending. Finance Secretary Ajay Bhushan Pandey reportedly told the committee headed by Jayant Sinha that the government is in no position to pay the GST share of states as per the current revenue sharing formula. The GST law mandates the centre must compensate the states for any shortfall in reaching a 14% revenue growth target, which is calculated on FY16 revenue base from taxes subsumed in GST. GST compensation is to be paid out bi-monthly. Under the GST structure, taxes are levied under 5%, 12%, 18% and 28% slabs. On top of the highest tax slab, a cess is levied on luxury, sin and demerit goods, and the proceeds from the same are used to compensate states for any revenue loss. States which are incurring huge expenses to battle coronavirus and also assist migrants and those who lost jobs have been facing a severe resource crunch and therefore have been repeatedly asking the centre to release the pending compensation funds to them. GST comprises around 60% of the tax revenues of states and hence the compensation plays an important role in the finances of the states. The latest statements by the centre have got them alarmed and up in arms. State finance ministers in the past as well have opposed any attempt to rationalize the levies. States have suggested that if revenues fall short, funds should be raised by the council from market. Reports suggest that Finance Secretary pointed at the provisions in the GST Act to rework the formula for paying compensation to the state governments if the revenue collection drops below a certain level. Under the GST framework, any decision on compensation and how it needs to be provided rests with the GST Council. The GST Act 2017 allows for paying compensation to states over a 5-year transition period for any potential loss in revenues. Experts suggest that there are 3 options before the Council. 1. Increase the compensation cess or its ambit to include more goods and services. 2. To increase cess rate on the existing items. This means raising the tax rate on items by rationalizing of rates by shuffling slab rates. This move has its own limitations. An increase in compensation cess on few items could only yield about 2,000 to 3,000 crore rupees a year. Or 3. Borrow from the market.